Welcome to Savemake.com. Action, start. Today I'm going to share with you my golden rules about stocks buying and stock selling. And by the way, a disclaimer, I'm not a financial planner, so I am just sharing what we are doing as a family, but it's not by any means an advice for you to do so. You can just listen and then take away what you want. So yesterday, it always starts, my videos always start with a story. So yesterday I was with one of my tenants, a young tenant, and he was curious about investment, and he started to speak about the stock market, and he asked me what were my techniques, how I was doing. So I have about 7 or 8 rules, and I'm going to share them with you. And I want to start with the first one, which is really the engine. So if you compare that with a car, in a car you have a lot of things. You have the wheels, you have the chassis, you have the seats, but you have the engine, The engine is the powerhouse of your car. So the powerhouse is that simple theory of the 1/3. And what does it mean? So here on the graph, I have the dollars, and here the time. So you imagine a stock with the value that has been going up and down. And today it's here, whatever is the past. And do you know what will be the value tomorrow? No, nobody knows. What will be the trend? People may have an opinion, you can read a lot, but if you were sure one way or another, then you would make decision knowing what the future holds. Because you don't know, I would say that there are 3 options, and I'm going to use still the same color coding, so it's blue. It can go down, flat, or up. And you are going to see what is the attitude that you need to have in each of the direction. So let's start perhaps by what is the most controversial or new, and that I want to share with you. If it goes down, which pen should I use? The red? No, I'm going to use the green. Why? You are going to see why. So when it goes down, when you want to buy something, do you want to buy when it's cheap, inexpensive, or very, very pricey for the same object? Well, I'll let you answer that question. Obviously, you want to pay as little as possible for that item. If you can get a discount, you are going to take it. So when it goes down, after a while, I buy 1/3 more. And I'm going to explain you why. If it continues to go down, I continue to buy 1/3 more. Eventually, why? And that's the reason why I've put that in green, because it's my opportunity to buy a stock at a lower price than what it was before. Eventually, it's going to pick up and go back, I would say, to normal, like something like that. And you will have bought that stock at a lower value than usual. Because a lot of stocks are doing like that, like a zigzag, unless they are completely mismanaged and they go bankrupt. And sometimes it happens. But I'm speaking about normal company with some good visibility. So this is why I've put the green color when it goes down. A lot of people are depressed, and you should not be. If it's flat, well, I don't do anything. If it's going to go up, so which color should I use? Of course, it's obvious. The green. So it's not. I never ask tricky question. The questions are just there to make you think and so that you digest the idea and you make this idea perhaps yours. So when it's going up, well, I'm going to sell 1/3. Don't ask me when. It's when I think it has been long enough. And then if it continues, I'm going to continue to sell 1/3 and so on. The entire idea of this concept is to increase the gap between your average purchasing price and your average selling price. And the wider the gap is, the more profit you are making. So that has been my theory, and I have been living with it for a long time. And you need always to be happy about the situation. So no regrets, they are not going to bring you anything. Be careful not to listen to the media or the naysayers, because all those people are going to speak. They are going to tell, oh, the market is down, the market is down. Well, if you read the quotes of Warren Buffett and others, that's when they buy. They are happy, those guys. But the media, they present that in a very defeating manner. So you need to be a contrarian. Always invest with money that you don't need. Always start with very, very small. I started with $50. It was a lot for me at that time. It was almost all my pocket money when I was 18. But in today's money, it's almost nothing. And sometimes you need to be bold, because when you are going to buy more, those third, that's what I would call a bold trade. And perhaps the last thing is assess your risk tolerance. That's very important. Invest in industries that you know, and surround yourself with people who are like-minded, who are going to be good advisors with whom you can have good discussions. If you have any questions, please ask them through the comment section. I always answer, and again, I thank you very much for watching this video.